Good morning. This is Japanese Economic Review Channel. Welcome to today's executive briefing. On June 17, 2026, the Tokyo market reached a historic milestone. We are witnessing a massive shift in global capital as both the Nikkei 225 and TOPIX hit all-time highs. This rally is driven by a landmark geopolitical breakthrough and an aggressive rotation into value sectors, all while investors maintain a cautious wait-and-see stance ahead of the imminent FOMC decisions. The figures are unprecedented. The Nikkei 225 closed at 69,902, while TOPIX reached 4,013, both record closing highs. Market liquidity was immense, with trading value on the prime market surging to 10.41 trillion yen. Despite the yen remaining weak at 160 per dollar, the real story is the internal market energy and broadening participation that pushed the index to an intraday peak of 70,125. The primary spark was the US-Iran ceasefire agreement, sparking hopes for Middle East stabilization. This geopolitical shift caused crude oil futures to plunge for the fourth consecutive day, effectively softening global inflation fears. Consequently, we saw a massive wave of capital flowing out of overextended growth stocks and into cyclical, economy-sensitive sectors, pushing the Dow toward the 52,000 mark. We observed a sharp divergence in the US. While the Dow hit record highs on value buying, the Nasdaq dropped as major semiconductor players like Intel and AMD faced heavy sell-offs. This reflects a strategic rotation over rally. Investors are reallocating profits from high-tech growth into undervalued consumer and industrial stocks, as the cooling of energy prices alters the macro outlook. The Nikkei's journey today was a narrative of resilience. We opened with a tech shock following the US slump, but aggressive dip buying quickly took control. By 12:59 p.m., the index pierced the 70,000 threshold. However, momentum stalled at the FOMC plateau, where investors pulled back to digest gains and await the Federal Reserve's policy signals later tonight. Sector performance revealed a clear preference for tangible value. 22 sectors rose, led by precision manufacturing and banking, with names like NGK, Disco, and MUFG showing strength. Conversely, heavy logistics and basic metals like marine transport and steel saw outflows. The insight is clear. Capital is aggressively favoring precision engineering and financials over traditional heavy industries. In contrast to the blue chip rally, the TSE Growth 250 index retracted, reflecting fragile risk appetite in the emerging tier. While Libreware saw gains, others like PowerX faced selling pressure. Notably, Go, ticker 581A, opened strong on its second day of listing but flattened as sustained buying failed to materialize, signaling a more discerning environment for new listings. Beyond the indices, corporate Japan is moving strategically. Honda expanded its electric power series to accelerate its EV strategy, while Yamaha Motor signed a carbon-neutral pact with Chubu Electric. In M&A, Airwater divested its suite segment to sharpen its core focus. These actions highlight a broader trend of structural reform and sustainability-driven alliances amidst the market records. June 17th reflects a market in high-stakes transition. While the struggle around the 70,000 level makes headlines, the underlying narrative is the rotation into traditional manufacturing and financials. Investors are anchoring their portfolios in tangible value and corporate resilience as they await the FOMC's verdict. The market's structural strength suggests this rally is driven by more than just momentum. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.